Hey everybody, welcome to the Calm Dollar Technicals for November 14th to November 18th for Aussie dollar, dollar CAD, and Kiwi dollar. And I think the biggest story in the Calm Dollar land this week is the unwind of the carry trade as the Calm Dollars become the victims of the U.S. rate increase. U.S. rates now are trading around they were as high as I think 215 on the 10-year. Just to give you an idea, they were 150 basis points versus 215 basis points just 2 or 3 months ago. So the compression in yields between the Aussie, the Kiwi, has been massive and is actually going the other way because, of course, this week we had the RBNZ cut rates on the Kiwi. That is taking very much a serious toll on the Calm Dollars as profit taking and the unwind of the carry trade really takes force. And with the caddy, the oil price is going down below the 50 is starting to hurt that as well. So dollar CAD is now above the 135 as we've been talking about. The idea of dollar CAD going above 35 last week definitely has panned out. So overall, the commodity trades are certainly headed to the downside. We've had a lot of liquidation this week, and they become very much a sell the rally trade. And I think in more ways than one, not just only against the dollar itself, but probably on the crosses as well, because they're starting to show some serious relative weakness. When you're looking at the ranges this week, the Aussie dollar pretty much has the 77.50 to 74.50, pretty wide ranges on the actually too many zeros there on the range, but it really is looking like it wants to test that lower band. One of the, of course, big things this week was the increase in volatility, so you have to look at much wider ranges as we examine the charts. Caddy, the next level is 36, probably maybe even 37 as far as resistance, and 34 now becomes the support in the Caddy. And the Kiwi, the one other thing that came out besides the cut in the interest rate was this jaw bonding by the RBNZ that they're willing to intervene. They clearly do not want to see the Kiwi anywhere close to the 74 level. They'd much rather prefer to see it around 70, and that appears to be where the Kiwi is really headed as far as support goes. This week we have Australian employment, we have New Zealand retail sales, and we have some other smattering of small Canadian data, but generally that's going to be the two primary pieces of data that we're going to be watching at, and also, of course, the U.S. data. In many ways, the commodity trade is going to be very responsive to, I think, U.S. rates first, and then commodity prices second. We'll see if iron ore prices and some of the other, and copper, which has also been acting quite well, could provide some support for commodities as we go forward this week. But overall, I think still the dominant theme is going to be the rate compression between the U.S. rates and the commodity rates, and that's what's really driving everything to the downside. Let's take a look at the charts here and just see how everything shapes up. So when we're looking at, let's just start actually with the Aussie, not the Caddy. When you look at the Aussie, it's pretty obvious here that the range, oops, there we go. Having a hard time pulling up the Australian dollar here. Just 1 second, I'm sorry. Okay, there we go. So when you're looking at the Australian dollar, I think you can pretty much, with a high degree of conviction, say we've had a triple top here at the 77.50. We still haven't broken the distribution top. This is really the big distribution top, 74.50 to 77.50. The 74.50 still remains decent support, and there is a chance here that it could find support here and again resume its upward trend towards the range. In other words, we could still be seeing range trading, but a break below the 74.50 is going to be a very seminal event. It would really seal the fate of the Aussie to the downside because it would technically pretty much show a highly distributive range here, and at that point very much convince everybody that the Aussie becomes so much a sell the rally kind of a trade. For now, though, the 74.50 is going to be the very key support, and of course, that's going to be the major area of battle between the bulls and the bears. Are going to be watching that level. As far as the upside goes, the 77, 650, 77 pretty much remains the key resistance points. And the 77.50 is a very hardcore resistance points for the Aussie. You would have to have a massive reversal until it clears those levels. You kind of have to assume that the benefit of doubt is to the short side. On dollar CAD, it's quite the opposite. You know, we've been bulls dollar CAD ever since we started talking about it at the beginning of the summer, and it's been a very strong, albeit sort of a stealthy uptrend move here. It doesn't look like there's any signs of slowing down. 136 is very much in sights here for the bulls. A dip back below the 34s represents a pretty decent support area. As you can see, this was support. This was resistance and now becomes present support. If we have to expand on, let me see if I can just get into longer charts here, 3-year charts. You can see that on 3-year charts here, a recovery move all the way up here towards the 37 level is not at all unlikely or impossible as we move forward. Now, the next thing I just want to see if I can pull this up is the Kiwi, because the Kiwi is even sharper than the Aussie in terms of showing its downtrend. Look at his failure. It's a lower high. It's a lower high of the 74s. Fails quite strongly. 3 separate strong days of very, very strong selling. Yes, definitely coming into a little bit of a support here at the 71. A bounce back very much possible, but the real support is going to be at the 70s. So I think that's going to be the battle. Just like 74.50 is the battle for the Aussie, the 70 is going to be the battle for the Kiwi, and that's really where a lot of people are going to be making their first bid in the trade. It looks to be like it's dying to get down there. And the downward trend in the Kiwi is just as clear as it is in the Aussie, with a very distributive top as we look at it. So wish you guys the best of luck, the best of trading. We're going to be watching for the calm dollars to sell in any kind of a rally, as the downward trend seems to be the dominant trend in the trade.